Hey guys, it's January 20th, 2016. It's 11:23 a.m. here in Korea. Should be 9:23 p.m. back in the States. So this is overnight session that I have right now on the screen that you guys can see right now. This is my Thinkorswim platform, as you guys seen before. Got my support resistance lines. These are all resistance, should be resistance at this point, but and just to show you why it broke all of it during the daytime session yesterday. I won't go too much into what happened yesterday. It was a down day. There was some support that was found down here in these levels here, and then finally bounced, as you can see. And then we opened up the overnight session, and at this point, we were looking at these zones again to kind of give us a clue of how we wanted to trade. Now, what I'm going to show you here is one, using Thinkorswim plus my NinjaTrade platform, which I use to actually execute the trades, and then this particular indicator that I have here. If you're interested, I can tell you exactly where to purchase it or lease it, but it also gives me areas of where there's Fibonacci retracements and where markets have broken support or resistance that may possibly lead to a trade. And I'll show you exactly how I do that with using two separate charts here. So okay, to go back to Thinkorswim. So what I did here, and the reason why I like the overnight sessions is because it's slower and it seems to trend better, meaning if it moves in one direction, it'll continue to go in that direction. So in this case, this morning, the reason why I want to show you this example is because it was just a great example. So kind of came up this resistance area, came down, right, and hit the support. The support did not hold, and then you see this huge selling pressure that moved all the way down, right, and that was over. It looks like over a 10-tick move. A 10-point move. And then what you're looking for at that point is for this thing to retrace back up to that support zone that was broken to look for a trade. Okay, and that's basically what happened here. So I'll go over really broadly how this trade would have worked. So you see it break, right, comes back up, and you wait to sell it into this zone here, right, that it just broke. So you can sell it into the middle or at the beginning of the zone with a stop above that zone. And basically what you would have done is you would have sold from here and waited for it to come back down into this area right here. Okay, so say that it was let's say 65, 66, 67, 68, 69, 70, between 5 to 6 points you could have made off of that trade. Okay, so that's one trade there. And then the second trade actually was this one here. And this, what I'll show you in a minute, I would have traded. This would I would have traded just on this charts alone, just using these zones, and I would have made some money here. When I saw this come back up here, I have my NinjaTrader here, which shows me, and I could kind of zoom out a little bit here. This was the move that really brought down this price movement here on this candlesticks. And this is a 1-minute chart right now that I'm showing you. Okay, so it kind of ended down here at the 1861. Let's match up here, 1861, right? And then it came back up. Now what I do is I look for, this is a 3 Simrenko and 5 Simrenko. It's just a type of candlestick chart that this proprietary indicator uses. What I do is I just match up the 5 and the 3 for a Fibonacci retracement. So you both see on this chart here that there's a red sell signal, and now I'm just looking for a retracement, right? So this one is a longer term chart, so I see it retrace all the back up here to the 1871. Now look what happened here. Retrace back up, 1871. Okay, that was that initial trade where it came back up here and we could have executed here. And if you would have missed that one, you could hit this one right here, where it came back down to 1863, 64, right? 1863, 64, 63, 64, which we'd have exited after this short right here. And then you see it retrace again, right? And then you see the sell signal come in, which is these arrows, okay? But it also matches up over here, okay? So you have the sell signal here, you also have a sell signal here, and when they're very close to matching up, right, at these two peaks, you can use that to your advantage, right? And just kind of like what's going on right here, you know, it broke below this low value area, which is in this dotted green line over here, came back up, retraced up this level. Same thing here on the 5 sim, came back up, and look at that. We got a sell signal here, and we also have a sell signal here. And look what's going on. It's moving back down again, right? So, real quickly, I know that was pretty simplified there, but you know, I do have a course available for those that want to understand this in more detail. This is just to give you an example of you know, how you could have traded this, and what I want to show you real quickly is the psychology also. Okay, so you see how it broke these support levels. It's coming back up, right? And it's coming back up, and then it finally drops down again. Now, if people are thinking here at this level, right, because we broke this level before, now you're going to have people on the opposite side that were buying here that brought this price level up, okay? If people were buying here, right, thinking that it was going to move all the way back up, you know, right, or even up to this level again, where do you think their stop losses are at? Probably right below here, right? Does that make sense? Because that's what all the books tell you. That's what everybody tells you, right? Now, as you see this thing start to bounce, if you're still a seller, right, and you see this thing retrace back up, here's another selling. It's probably a Fibonacci retracement. You can see, I can probably put it right here. High to lows. Okay, there's your 62. Didn't break the 76, 62. Probably 68% retracement level right there. I'll zoom in a little bit more, right? And if you're a seller and you sell here, what you're going to do is you're going to look and see where all these sell stops are probably at. And you can see when it first initially came down to this level right here, where buyers took over, look what happens when it comes back down to that level. It bounces. There was some absorption there. But then soon after that, the next 1 minute candle bar, you can see it breaks it. And then what happens after that? All the sell stops push it all the way back down within the next minute. All the way back down to where? The next support level. So that would have been another good trade for you. Selling here and actually being able to either exit partially here and then having some other orders waiting right at the top of that zone. The next zone down here. Okay. As you can see, the market is trending, like I said, overnight. Overnight session, markets tend to trend. And you can see that right here, you know, we weren't either buyers or sellers. But this right here, you could see, okay, all right, we have sellers in the market now. So my bias at that point was to sell, not to buy. Right? I cannot predict where the bounce is going to be. But watch this thing bounce and then sell as it comes back up to the levels that were broken. Okay. Same thing you could have done here. As it broke this level here, came back up into this level here, could have sold again up there. Now, of course, these are all again oversimplified ideas, but what I'm trying to show you is that this stuff works according to support and resistance levels, order flow. You know, just look at the psychology in the market. Look at, like I said, the support and resistance levels in conjunction also with Fibonacci's, and you know, using charts like I have over here, or it kind of gives you a more detailed perspective of that, right? And you can still safely do it with stops that are pretty tight, right? So you know, that might have been a one point 1.5 point stop, but you're gonna make 4 to 5 points, possibly even more. So that reward to risk ratio is a lot greater for you. So these are kind of trades that are gonna, over time, make compound and make you more money. Okay. So I hope that kind of helped highlight the overnight sessions. Some people call it Globex sessions, but just wanted to use this as a teaching point because it just worked out perfectly right there. So if you guys have any more questions, leave a comment, okay? And email me if you need more information on how this stuff works. I'm still working on a full course and ebook that you guys can look at that basically captures all the things that I talked about today. And hope you guys can use this to your advantage. Look and study the charts and continue to trade well. All right. Talk to you guys soon. Bye.